Hi guys. Investor X is back again with a new video. In this video we will learn about a simple and a fundamental quest: what is a stock? So, let's start our video. A stock represents ownership in a company. When you buy a stock, you're essentially purchasing a small piece of that company. This ownership means you become a shareholder, and depending on the type of stock, it may entitle you to vote on company matters or receive a portion of the company's profits in the form of dividends. Think of it this way: if a company is a pie, owning a stock is like owning a slice of that pie. And the more slices you own, the bigger your claim on the company's assets and earnings. Now, let's talk about the different types of stocks. Common stock gives you voting rights and the potential to earn dividends. Most retail investors own common stock. Preferred stock usually doesn't offer voting rights, but it provides fixed dividends and takes priority over common stock in the event of liquidation. There's also a distinction between growth stocks and value stocks. Growth stocks belong to companies expected to grow quickly. They often reinvest profits back into the business instead of paying dividends. Value stocks are considered undervalued based on their fundamentals and may pay regular dividends. Understanding these types helps you align your investments with your financial goals and risk tolerance. Stocks are traded on platforms called stock exchanges. The most well-known ones include the New York Stock Exchange, NYSE, and the Nasdaq. Every publicly traded company has a ticker symbol, a short code used to identify the company on these exchanges. For example, Apple is Apple, and Tesla is Tesla. Knowing how to read and search for tickers is essential when researching or placing trades. Stock prices are determined by supply and demand in the market. When more people want to buy a stock than sell it, the price goes up. If more want to sell than buy, the price goes down. This interaction happens in real time, and prices adjust based on news, earnings, investor sentiment, and economic indicators. It's dynamic and can change quickly, especially with popular or volatile stocks. Companies report their earnings every quarter. Strong earnings can boost a stock's price, while poor earnings might cause it to fall. Some companies share their profits with shareholders through dividends. Not all stocks pay dividends, but dividend-paying companies are often well-established and financially healthy. You can choose to reinvest dividends to buy more shares, helping your investment compound over time. A stock quote provides essential information for any investor. It includes the last traded price, the day's high and low, volume, or how many shares were traded, the 52-week high and low, giving context to the stock's performance. This information helps you understand how the stock is behaving and whether it's in a strong or weak position compared to its historical performance. You've probably heard of indices like the S&P 500, Dow Jones, or Nasdaq. These represent groups of stocks and help us understand overall market trends. If the S&P 500 is going up, it generally means that large US companies are performing well. These indices also serve as benchmarks to measure your portfolio's performance. Let's look at an example: Apple's stock. Apple is one of the world's most valuable companies. By looking at its stock history, financials, and dividend payments, we can see how a well-known company behaves over time. Its stock price has steadily increased over the past decade. It pays dividends. It's part of major indices like the S&P 500. Apple is a great example of how understanding basic stock concepts, like price, dividends, and growth, all come together when analyzing a real-world company. Let's summarize what we've learned. A stock represents ownership in a company. There are different types of stocks, each with its own benefits and risks. Stocks are traded on exchanges using ticker symbols. Prices are determined by market supply and demand. Earnings and dividends can influence price and income. Reading a stock quote gives vital trading information. Indices help track market trends. A real-world case like Apple shows how these elements work together.